Ian Harnett, he's Managing Director at Absolute Strategy Research. Ian, good morning to you. We are coming out of a very difficult third quarter. When you look to the fourth quarter and perhaps beyond, more of the same?
Well, certainly it's going to be very difficult indeed. I think what we're talking about is an environment where you're able to take short-term trades or look for long-term value. But, you know, looking at anything else, the politicisation of capital means that really investors are just betting on that medium-term outlook at the current time.
I suppose I'm going to ask you, how do you position yourself as investments are concerned? Do you have to say, look, my investment strategy has to be for the long game? Because if you take the shorter view, it could be playing Russian roulette.
It depends on what type of investor you are. You know, clearly there are some people that want to focus on more short-term trades, and perhaps hedge funds are able to do that. The institutional funds, however, have clear mandates where they are determined to be focused on that longer term. Now, what we've seen this quarter appears to be that those institutional investors have reined back some of their activity, leaving the field open for much more of the short-term, high-frequency and perhaps the hedge fund activities.
So let's take a look at equities. You agree that, you know, maybe these are oversold at the moment, which gives the impression actually there are bargains to be had out there.
Super. And, you know, I think what you've got is a situation where people have been hiding, which is areas like the internationally exposed defensive stocks, are running at very strong premiums at the current time. Now, I think there's a big risk here because, you know, if we do see the continuation of the global slowdown coming through, then you're going to see those start to underperform. They're the one bit of the market that have actually held up. If not, however, if we get recovery, then the cyclicals are going to run. So they're a pretty exposed place to be.
Yeah, I was going to say, where is the value at the moment? And perhaps which countries, which industries are we looking at?
I think the value is definitely there. You know, I think in Europe, if we get a resolution to these, some of the political concerns,
if Ian.
That fantastic word that we had. But you know, when you look at the valuations in Europe, these are levels when in 2008 and then all the way back to the 1970s were enough to actually trigger rallies. And you know, clearly it's the cyclical areas and it's the financials. The financials have to run to get the equity market moving higher.
Yes, and now what's going to happen to those financial shares and that sort of thing? What's it going to take for confidence to return there? A complete positive recapitalisation? Yeah?
Well, I think it's got to be involvement by the ECB. We've got to see several things happen. And I think Ireland gives you a good model. You need recapitalisation, recognition. You probably need to have a bad bank in some of these countries emerge. And you need that massive EFSF participation that draws in foreign sovereign wealth funds. You've got to get some surplus countries putting some capital into Europe, because otherwise you're just rearranging the deck chairs on the Titanic.
And what about bonds? If equities are undersold, they are overbought, right?
Absolutely.
And,
so,
is it time maybe for a little risk to start returning to the market?
Well, you know, I think that you know, when you look at some of these bond markets, then it is potentially a tricky place. You know, question marks that we're starting to hear is whether German bonds really are that safe. We're starting to see the CDSs moving out. You know, if the ECB has to monetize some of this debt, you know, how confident are people going to remain that bonds really should be quite as low in terms of yields they are? You know, we'd actually rather see something like the Italian bond yields coming back down towards the French. You know, if it all goes wrong, the French yields are going to push up towards the Italian. If it actually gets resolved, the Italian is going to come down much closer to where the French are today.
So many variables. Ian Harnett, Managing Director of Absolute Strategy Research. Pleasure to talk to you. Thanks very much indeed.
Thank you very much.